In this video, I'm going to share with you my red trade recap where I'm down just over 0.5% on this one trade on Euro Australian dollar. Hi everybody, if you're new to the channel, my name's Emily from Mindfully Trading, where I share videos relating to my journey as I grow and develop as a trader. And in this video, I'm going to break down my losing trade on Euro Australian dollar, so let's dive onto the charts. Hi everybody, so I've got the 4-hour chart currently open for Euro Australian dollar, and the strategy that I was using on this trade was a trend continuation strategy. As you can see from this chart, we have been in this downtrend and we've seen this pullback here, and that was where I felt was a good opportunity to get short. And just coming on to the daily chart here, I was aware we have been in this downtrend. We came up here and since then we've come back down, and I was aware that we were starting to get a little bit extended from the moving averages, but I have been relying more on price action. I like to use the moving averages just as an indicator, as their intention is, but not purely for taking trade executions and making trade plans. So I saw here that we were in this downtrend, and I felt like it was a good opportunity to try to get onto the trend just to get a short win. Now, I actually got into this trade yesterday, the 2nd of September, and ideally I would have liked to have gotten in sooner, but the ideal signal was actually in the Asian time when I was asleep. So I'll just show you here on the 4-hourly. So we came down to this low point here, and then we started to see this bounce up, and it looked to be a bit of a W pattern because we had another drop down here, and then we've pulled back here to the 20 moving average on the 4-hourly chart, and then we had this quite strong red bearish candle down here. So I felt like this was the good sign of where we're actually going to continue with this downtrend. Now, I didn't actually see this trade until about this candle here, which, as I said, this was the 2 o'clock in the morning candle for the 4-hourly chart. And what I liked about this candle was we had this push up. We sort of came into this region. I've got this horizontal ray drawn here, which has been this area of resistance here where we've not really broken through. We broke through once here, and then we had this sharp pull down, so I felt like that was a good resistance area, and that combined with the 20 moving average is just an added area of confluence there to confirm the trade for short. And this nice candle here, the pin bar rejecting those 2 points, that ideally, which works out at 1.61727, would have been the place where I would have liked to have gotten short. But I kind of looked at this on the 4-hourly, and then I went down a time frame onto the hourly chart here just to see a little bit more in depth. So this blue arrow here represents the 4-hourly point where we had that nice pin bar. And when I got interested in this on the hourly was the close of this candle here, the 8 o'clock candle, where it was actually a more bullish pin bar where we tested this bottom trend line and pushed back up, but it pushed back up into that area where I was looking at taking a short on the 4-hourly chart, so I actually got short at this point. But unfortunately, I didn't quite see the breakout that I was expecting to happen to the downside. I got into this. I felt like I had the right idea. I had the downtrend. I was using the market structure, and I had my 4-hourly pin bar candlestick pattern signal. But unfortunately, it just didn't work out, and sometimes that happens with trend continuation. Obviously, we can see the continuation of the trend, or we can see a bounce back and a more stronger pullback to the upside, which is what we seem to be experiencing here. If I zoom out a bit more, you can see that we did break this upper horizontal ray here, but it did come strong back down into this consolidation area. So I felt like these were all signs showing that we were going to go down. But as I said, it just hasn't quite worked out. I did, since getting into this trade, I did go down, and I got to about 0.5% in profit, but it was nowhere near my target, because as you can see from my plan here, initially I was using a 35 pip stop, so my original stop order was at this 1.6199, so sort of like the whole pound area there. And then I was looking for a 2-to-1 profit ratio here, because I have got this horizontal ray, which was the next sort of possible resistance point using the 4-hourly chart. So I was going to watch this area, maybe take shorter profits at this trend line here that I drew, which is my 1.5 target, but predominantly I was looking for a 2% profit target for this. But as you can see here, we came down. I only came down to about 0.5% in profit, and then we came back up very, very close to my stop. It didn't actually trigger it at this point, it was just really close, and then it came down again So I thought I'd leave it, but I was sort of watching it thinking, you know, should I get out of this at break even? I still felt quite confident with my trade plan because I was going with the trend. So what I decided to do was I actually reduced my stop down to the 1.6194 level. So I just took a few pips off that just to try and reduce my risk a little bit, because I felt like we'd already had this push up here, and if we came back up to this level there was a good chance it'd break, and I may as well just cut that loser. So we carried on consolidating. I came down a little bit more into profit, so that was close to 1%, but again that happened in the Asian time, so I just wasn't able to see that. And then this morning, as you can see, we've just had a rally up and it's hit my adjusted stop level. It has continued as well, so it would have hit my original stop, so that at least takes a little bit of the blow away from it being a loser, because I've managed to just cut it a little bit. So as a result, instead of losing 1% on the account, which is what I usually risk, I ended up losing 0.5% on the account. So it's not too bad. Still a losing trade, but I don't really feel too bad about it, because I don't feel like I made any bad judgments. I don't feel like I was emotional. I just feel like it's one of those times where you get into a trade and it kind of ticks those boxes, but for whatever reason just doesn't work out. The probabilities are not in your favour. Just jumping on to the daily chart just to get the bigger perspective. I mean, I was a little bit concerned that we were getting extended, as I said before, from the moving averages, but I didn't feel like it was enough cause for concern to not take the trade. It will be interesting to see, because if I zoom out here, we do have this horizontal ray, which has been this sort of zone of support, and we look to be making a little bit of a cup. So I'd be quite interested to see if over the next few days we do consolidate a little bit to form that handle, and then perhaps it does break down the way that I was sort of initially thinking. Maybe I've just gotten in a little bit too soon, so I'll just observe that and see how that goes. But meanwhile, I'm just going to make a note of that trading data, which unfortunately puts me down 0.5% so far for September, but you know, it's right at the beginning of the month, so I'm not too worried. Okay, so a new sheet here on my trade record sheet, and I'm just going to make a note of this trade. And just checking that into my broker, because I did hold this position overnight, so I think I was charged 9p for financing fee. So I'm just going to add that to the chart as well. So the setup was a trend continuation using the 4 hourly for technical analysis and the 1 hourly for trade execution. I think in hindsight, just to try to learn from this loser, going back to the 4 hourly here, I mean, I do accept that I got into this, it was in this consolidation phase, and usually the best place to get short would be at the top of the range, and then obviously you do get quite a lot of people coming in and buying at the bottom of the range as it goes with the ranges when we're going up and down. But I was aiming more for the break of that, for the continuation, but and there's obviously the risk, and I think that maybe to avoid that risk in future, I would probably be better off waiting for a clear break of consolidation, maybe a retest, and then maybe that will be the best place to get short. I did get short sooner because I just felt like it was going to go with the trend, and I wanted to get a higher position, a better entry. But you know, obviously the risk of that is what went in the end and caused the loser. Okay, so minus £2.87, you know, it's not the end of the world. It's minus 0.5% on the account. My account's small. It's not exactly the best start I would have liked to have had for the new month, but it's only one trade in. So I think cutting losers is always a good start. It's better than letting them run and having a bigger loss than necessary. So I hope you've enjoyed this short red day recap, or red trade recap. If you've got any questions or comments, leave them below. And if you have enjoyed the video, do drop me a like, because that really does help to share the love and show some appreciation. And I'll catch you on the next video. Thanks, guys. Bye.